Welcome back to Primary Source China Investment. This week we're on show D4. And if you recall last week, we said that there was no ask for this Biden-Xi meeting at the G20. For this week, the title is There is no reset. Because for a reset, it implies that we're going to go back to something. And that's an incorrect assumption. In the printout of the G20 meeting between Biden and Xi, there was some good news. Resume climate talks that were suspended after the Pelosi visit to Taiwan. Secretary Blinken is going to visit early next year. And there was a clear distaste for nuclear war in Ukraine, or over Ukraine, I should say. But there was no movement on tech transfer, human rights, Taiwan, although Biden did try to affirm that the U.S. position on Taiwan hasn't changed. But things that got less attention was the meeting between Trade Representative Catherine Tai and her counterpart, Minister Wang Wentao. For our conversation, that was the more important meeting. Just to frame everything, remember, Trump administration enacted tariffs on a number of products out of China, and China was supposed to buy more U.S. imports. That didn't happen. Biden has kept in those tariffs, and the administration hasn't really added any new tariffs or trade restrictions other than the tech, but they did launch an effort to boost cooperations with nations in the region. So right now, what are we thinking is the trade environment? And I've got some thoughts on that, but I want to give you, peng.guo, a chance to give me some thoughts.
I think generally it's still very positive signal for the two countries as well as for the globally. Firstly, two countries should stay in peace and object all the nuclear war and work on the climate change. That's the bigger topic. Peace will bring the money. So that's what we believe for that.
Yeah.
China also reacted pretty positively. So USC, they get a new China companies just to get the IPO, right? They in the market, and also a lot of the talk and things can move forward. So I think that's all the positive signal. Hopefully the worst scenario is already gone, and let's see what we can do for the next step. I think a lot of the China companies, they probably expect after China lifted the COVID zero policy and as well as the open the door. I heard a lot of like the international travel waiting period get shorter, and they already have some success experience. Right now, they probably they learn the new things differently. They probably take something different. They can still use the past greater success experience and back to the good situation.
The path forward does look a little bit different, though, because the U.S. and China are going to do their own thing vis-a-vis human rights or a lot of these political issues. The position seems to be, hey, look, we're going to trade with you, but these are our terms for trade. You either accept them or don't accept them. I think a lot of the past where, hey, look, we're a democracy, you guys are not a democracy, we want to push this democratic ideology on China. I mean, it's clearly not going to work. I mean, Xi Jinping.
Yeah, that's totally right. I think since the 1949, after the Republic of China set up, it's really China be the independent country. So they have their own goal and objective. They are not just yield for the outside pressure to give the benefits to outside. So that's most of the time it's good way probably have the good relationship and exchange the values. If you really want something, let's get the exchange or work together to create the value. Most of the things like that. Otherwise, probably there's no way you can just give the outside the pressure and you can get whatever you want. And that doesn't work anymore. So we should not just be afraid or should not just underestimate, just like work like a normal country. So do everything normally. That should be totally fine.
But companies are going to make different decisions based on that. So if you're a company operating in China, you're going to make a different decision now than you did maybe 5 or 10 years ago. So those kind of things are also going to change because China doesn't want to be lectured about human rights or Xinjiang or Tibet or whatever it is. And companies are going to say, hey, listen, do I want to have a business on the ground in a company that doesn't share my corporate values? I did want to mention one thing that Larry Summers, the former Treasury Secretary under Obama, he came out in the press this week and he said, we in the United States probably should be careful about evangelizing influence. I don't think it's really for us to tell China how they should organize their entire society. That's probably right. China's going to do what they want to do, and they have a political system in place, and it's up to the Chinese people to accept or reject that reality. So the U.S. is probably going to say, hey, look, okay, China, you're going to go do things politically that you're going to do, and we're going to make decisions based on that. And I think that's what I mean when there's no reset. I think that's the mode going forward.
So I hopefully really China and the United States should build like a predictable and reliable environment rather than unpredictable political things. That's a really nightmare for all the companies.
Absolutely. For the business that concerns us, though, the investment business, and we've been saying on this show for many, many, many months that those Chinese companies should trade in China, and if you're going to invest in China, you should buy those China-based companies. And there's been a recalibration. A lot of the companies that were listed in the U.S. are now, relisting back to Hong Kong. This is a theme that we've talked about a lot. But the reality is, this is really small money. The money from foreigners going into China and the money of China going out is really small table stakes. I mean, if you look at QDII, which allows Chinese people to invest abroad, and you look at the daily stock connect, the money leaving China is tiny. Daily amount into Hong Kong is $3 billion US. These are small, they sound large, but in the scope of everything, they're very small numbers. So, my argument is, if all of these gates and all of this regulatory environment simply went away, all these programs went away, you wouldn't have a massive exodus from China. And similarly, you wouldn't have a massive input from foreign investors going into China. Sure, there may be some sloshing around of speculators, but long-term investors are not going to change their minds about investing in China. And similarly, Chinese investors are not going to change their minds about investing abroad overnight.
I totally agree. So this small amount is like a tough question. Is that an opportunity or is that a risk? So if a positive guy thinks, okay, this might be grow up, and aggressive guys, so they probably think that's probably too early. They have to wait till the market get a little bit bigger. So I think the good news is like the Hong Kong government and the China government, they probably have a lot of the new policy. They change it. Most of the people don't have too much time to understand that.
Yeah.
So that could directly impact the market. As long as asset management is a long-term business, so everything should follow the long term. That will give the right direction.
It absolutely is a long-term business. The problem is you have so many changes that have happened in any 5-year or 10-year period. All of those changes have made foreign players in China at a disadvantage because the regulatory requirement and the human resource requirement has gotten more and more expensive. I submit all of these regulations are making it more difficult for companies to compete. And of course, the Chinese firms on the ground have a huge leg up. They've been in the business. They're actually aligned with CSRC. When CSRC wants to do something, they call up the top asset managers and say, hey, listen, we're thinking about this. Give us a white paper, right? So there is this home field advantage that can't be overlooked.
Especially in the COVID period, that's a lot of the mess up for the regulation, policy, execution, different city, different level. That's triggered many new problems. And hopefully after those things get cleaned up and people can learn the things differently and also create the more a good environment for all the companies. Basically, I believe China is still welcome like the foreign companies, but for the execution level, that could be many detailed problems or need to be overcome to do business with China. For the investment, it's also it's relatively easy. Just open the door through the existing channel, whatever, purchase the product. That's the normal way to do it. Probably it's better to buy the fund rather than if you're running new customers. So rather than deal with the individual project.
Right. Right. And right now you say it's easy. It's relatively easy. I won't say it's easy. It's relatively easy, but buying individual stocks, that's actually quite difficult for a US, investor, high net worth individual, whatever, because they don't know these paths. They don't know the regulatory environment. It's absolutely more simple to buy a product. And you and I have talked about this a lot. Just buying a product, you don't even know what's in the product. People are saying, even the FT, just this morning, I was reading an article. The FT was saying, oh, speculators are buying options on China ETFs. And I look at what they're talking about. They're talking about FXI. And, we've covered this before. FXI are not mainland stocks. FXI is Hong Kong listed stocks. So, either people are buying the wrong thing or the FT is just intellectually lazy. Both of those things can be true.
Yeah.
It's
I
just
think that
silly.
people already get busy. They just make things easy for them. That's how we create the value.
That's exactly right. So we're in the business of educating people a little bit. So with that, we're going to leave it for show D4. Thanks for tuning in. Everybody have a great Thanksgiving, and we'll see you next week.
Thank you. Happy Thanksgiving.